Ladies and gentlemen, welcome to Destination Retirement with Robert Kuhn.
Time to get on board with Robert Kuhn from Kuhn Capital Partners. Retirement is a destination you've spent decades saving for. And what you do with those savings can make all the difference in the life you live once you get there. Income planning, wealth planning, tax planning. Destination Retirement with Robert Kuhn starts right now.
Welcome. You're listening to Destination Retirement. I want to thank everybody for joining us this weekend. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, registered investment advisor, SEC registered investment advisor and fiduciary. Thank you for tuning in. If this is your first time, welcome. I wonder how many first-time listeners we actually have. It'd be neat to be able to figure that out. But if you're catching the show via podcast or listening as a regular listener, thanks for tuning back in. So 630-492-1912, 630-492-1912 is our number. Get on our calendar. We'd love to talk with you. Obviously, the markets have been pretty crazy. It's going to be really interesting to see what happens this year, and I'll give you kind of my thoughts and what I think is going to ultimately happen this year, this weekend. A few things on the housekeeping. For those of you that don't know, we're headquartered in Oak Brook, Illinois. So we're right across from the mall. So if you Google Fidelity in Oak Brook, we're not affiliated with Fidelity, but we happen to be in the same building. And so we're on we're on floor 5, suite 530. So love to see you. Very obviously centrally located. Can't believe it's coming up upon a year since we moved into that office. We've had a lot of individuals that we've been able to welcome in to our office, and we love to meet with individual investors. We love to meet with people who are tired of the same old 60-40 buy and hold and hope that ultimately the markets go up. Markets always go up over time. That's not a question. As you know, what makes our firm unique is we have very distinctly different strategies. As I always mention on the radio show, everything we talk about on the radio when it pertains to performance, past performance is not indicative of future results. So we want to make sure we always understand that. And when it comes to the energy strategy, which we'll talk a lot about this week, simply because tax time is coming up, even though you can't do anything for 2025, but you certainly can do some planning for 2026. We're not tax professionals, and so anything that we talk about best practice on the tax side is obviously meet with your tax professional before making any investment decisions, and it's for informational purposes only. So with that being said, banknotes, again, we kind of categorize, the banknotes and just call them banknotes. Every bank has a different name. Some are enhanced income yield notes, and some of the names are just, miles long. But that is what most individual investors reach out to us for, which is amazing, but also shocking at the same time that individual investment advisors have not even articulated what the banknote is. But the banknotes are strong. JP, Citi, Bank of America, Goldman, Morgan Stanley, UBS, Bank of America, if I didn't say that, Bank of Canada, BNP. There's just so many banks that are what we consider, they are tier one, the largest financial institutions in the world. That are, just providing such a unique service for certainly our clients. And I have to tell you, I understand individual investors not knowing what the banknotes are, what the structured notes are. I get that. Advisors, it just blows my mind. And 9 out of 10 advisors have absolutely no clue what a structured banknote is, which is shocking to me. It's such a massive space, and it's good for us because it's a distinctly it's a very, very strong competitive advantage that we have. But they're still pricing strong in the 11 to 12% range. Now, again, those are in the past. Every note is priced differently. But we're still, double digits for our tier ones, close to 12%. I think, 11.5 to 12 are the last couple. If we can see some more market volatility, we expect that note pricing to go up. And again, for educational purposes, the notes are for investors that really just want some sort of a hedge. They want some sort of downside protection inside of their portfolio. They want kind of the rules of the road in the strategy before you invest. And that's the beauty of these. They're a prospectus item. So you can review the prospectus. You can review past prospectuses. And they generally, we're going to use notes that have 30% downside. And what that means is the indexes that the note tracks, we generally don't do individual stock notes, even though you can. We tend to be a little bit more vanilla when it comes to these strategies because I think the yield is so high and what we're looking for is predictability. But we can, we usually will track really we do two notes, tier one, tier two. And one of the tier one notes is the S&P, the Russell, and the S&P Russell and the KRE, the Regional Bank Index, and you have 30% downside before you don't get paid your monthly coupon. So if it's a 12% note, hypothetically, you get 1% a month as long as those indexes are not down 30% from the date that you issue it. Our tier two notes, which price a little bit lower but have a little bit more they're so predictable to begin with. So I hesitate to say, some people, when you say tier one, it's like aggressive. Tier two, it's conservative. I personally believe they're both ultra conservative. The rules going in, 30% downside. That's pretty strong. But our tier two, which is slightly lower in yield, but it includes the Russell, the S&P, and the Dow. And those are still pricing around 10%. And so sometimes we use all of tier one, sometimes we use all of tier two. It really just comes down to, the goals and objectives of whatever the client is hoping to accomplish. So keep reaching out for those. I love it. I just absolutely love the fact that, we're doing the volume that we're doing. If you look at bonds and if you look at what bonds have done, I think bonds are going to have an incredibly tough year. Again, 2000, 2001, and 2002, I was sounding the alarm on interest rates. And, everybody was. Not that I'm super smart or I have a crystal ball. Everybody was. But we're very, very concerned with inflation. We're very concerned with interest rates this year and what's going to happen in the bond market. And 9 out of 10 advisors, it's my belief that they're still utilizing, plain Jane bonds. And if you look at what those have done, if they're supposed to be a portfolio stabilizer, most of your 10-year bond funds, are annualizing under 2%. They've popped up, here a little bit in the last few months. It was around 1%, but that's an issue. That is an absolute issue, and we see it far too often. These balanced portfolios and set it and forget it. And if that's what you want and that's how you want your money managed, I have to question, why are you paying an advisor? Why are you adding that additional layer of fees? Because you can get that at Fidelity, Vanguard, Schwab, kind of the do-it-yourself and be done with it and not pay an advisor their fees. If you're going to work with somebody, in my opinion, there needs to be value. And if you look at the value that we're bringing to the table, I think number one is the financial planning side, of course. Everything we do is financial planning based, risk tolerance based, tax reduction based. And then when you look at our investment strategies, the banknotes, you tell me if they're good. You have a 30% downside protection before you don't get paid a monthly coupon. And they're a relatively short-term investment. They're a 5-year note, but they're not callable for 6 months. So we know we're going to own it for 6 months. And then after the 6 months, each month it's callable. And if the indexes are at or above where they were when we bought it, the note's automatically called. And so you'd have to have an extreme market event to own these for 5 years. Absolutely extreme. I don't believe I've ever owned a note, can almost say with certainty, to the final valuation to maturity. Generally, these are, 8 to 16 months type investments, which is good and bad. I mean, because when you're getting, when a note gets called, you have to reprice it, right? And you can get a lower rate, you can get a higher rate. It's just depending upon where the rate is at that time. But I'm very concerned with fixed income. I'm very concerned with lazy advisors. I'm very concerned with individuals that are still just, buying these lifetime income annuities. And they don't understand how inflation is ultimately going to affect them. So 630-492-1912, 630-492-1912. We'd love to see you. We'd love to welcome you into our office. If you're outside of the Chicago area, we certainly can meet via Zoom or Google Meets or a conference call, whatever works best for you. So the notes are great. On the tax side, obviously tax reduction, when we look at the energy space, the energy strategy, our Bison 2 strategy is always so crazy busy in December, just absolutely off the charts, just because everybody starts thinking about taxes and tax reduction in January. So I'm going to talk a little bit about that in the next segment. Tax planning, when it comes to the investment side and what we have line of sight for as investment advisors, is really a year-round strategy. It's not just a December strategy. So our Bison 2 investment, which is you need to be an accredited investor, which is $1 million net worth, or a $1 million net worth, not including your primary residence, or $200,000 of income, and $300,000 of joint income, with the expectation that'll continue over the next couple of years. Great strategy. Diversified, we're going to talk a lot about that in the next segment, especially what's going on in the market. Generally, what captures people's interest are the tax benefits. Just chat GPT or pick your favorite AI and just, ask it, explain the tax benefits of investing in oil and gas. Now we're doing something totally different as far as not just buying a single well. We're partnering with the biggest and the best and have direct ownership in the wells of the Conocos, Exxon, Chevrons of the world. So we'll talk about that more in the second segment. But on the tax side, generally we target $80,000 to $90,000 of tax benefits per $100,000 of investment. That's active or passive. Again, informational purposes only. Best practice is to always, reach out to your tax professional, but these are very cut and dry strategies. So more after the break. 630-492-1912, 630-492-1912.
Wake up, brush your teeth, get dressed, get the kids out the door, drive to the office, and realize you don't even know how you got there. Seems like while we're working, we're operating on autopilot. And while that might be okay when it comes to the 9 to 5, autopilot won't cut it for your portfolio. Your portfolio needs to pay you, continue to grow, and be as tax and fee efficient as possible. And that's where Robert Kuhn and Kuhn Capital Partners can help you. Meeting with Robert and his team at Kuhn Capital Partners is a good start to living the retirement you want to live. To set up a visit and get on the calendar with Robert Kuhn, call 630-492-1912. That's 630-492-1912, and talk with Robert about the things you've heard on today's show. You can also find out more about what Kuhn Capital Partners can do to help you with your retirement online at KuhnCP.com. That's KUHNCP.com.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, KuhnCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn. I'm the president and founder of Kuhn Capital Partners, independent SEC-registered financial advisory firm, fiduciary, located in Oak Brook, just across from the mall, Oak Brook, Illinois. So we'd love to see everybody stop in. We're Google Fidelity office, Oak Brook, and we are on the 5th floor, suite 530. Turn left, doesn't matter which elevator you take, and you'll see our suite. We would love to welcome individuals into the office. So 630-492-1912, 630-492-1912. On our radar this year is fixed income, equity volatility. We're very, very concerned. We're very concerned with inflation. We're very concerned that the Fed is going to run the market hot. Just look at what gold, look at what precious metals are doing. We're very, very concerned with the devaluation of the dollar. Now, there's just so much going on. Some are good, some are bad, some are worrisome, some are going to help some of our strategies. But when you are working with an advisor, I think the job of an advisor is to still bring strategies that can deliver positive returns or principal protection in many, many different types of markets. And when you look at what we do, first segment, in every segment, we talk about the banknotes. Obviously, those are offered by the largest financial institutions. We encourage everybody who's considering them, just give us a call, 630-492-1912. Take a look at, the previous note prospectus so you can get an idea of what it is and what it's not. I mean, they are relatively simple, but there are some moving parts. It doesn't take a long time to understand them, but it's always a best practice to just get a previous note prospectus sent to you and get on our, kind of watch our videos. We've come up with some educational videos. We're in the process of making those live to individuals who are interested in the banknotes because they are, I believe, such a phenomenal investment to just kind of know the rules of the road going into the investment. Many people like the fact that there's 30% downside before you don't get paid your monthly coupon. That's great. I mean, that is really, really strong. And I think you compare that to any bond strategy. And when these are still pricing double digits currently, that's just, really, really strong. So 630-492-1912. On the tax side, we started to talk about Bison 2 LP. That's our private fund in the energy space that we manage. It is proprietary. And that strategy, I haven't talked a whole lot about this strategy on the radio at a kind of the level of consistency that I've talked about the banknotes. But it is a strategy that, when you look at, diversification and you look at correlation and you look at, again, when you're working with an advisor, I think you have to have just different strategies that can perform in different markets. I mean, I'm so tired of the 70-40, 60-40 balanced portfolios. Your portfolio's moving in tandem with the markets, and then the advisor, dressing it up or marketing it as, proprietary and unique and different, yet it's nothing that you couldn't do on your own. And our goal, our objective as fiduciaries, as financial planners, as investment advisors, is to deliver. I mean, in theory, it's to deliver something positive or protected in all markets. I mean, if you think about football, I mean, every play generally is geared to score a touchdown if it's ran to perfection. Now, obviously, that doesn't happen all the time, and just like the fact that we have the banknote strategy, we have our equity strategy, we have our hedge fund strategy in Bison Alpha, and we have our private fund, private equity strategy in Bison 2. I mean, all of those have different unique characteristics that should perform uniquely and in different markets. And that ultimately, I believe, is kind of the institutional feel, because when you look at kind of investment advice and you look at, what is out there, before I kind of get into, the Bison 2 a little bit more in more detail, when the kind of under $2 million investor to really what we believe to be the forgotten market is really the $3 million investor to the $15 million investor. 15 million, you're just on the very cusp of, kind of some private wealth management strategies, which really we believe our offering is just that. But we're seeing more and more people that have that $3 to $15 million just investing as if you have $1 million or $500,000. And advisors falling all over themselves to try to market something unique to that kind of demographic of investor. But yet it literally is nothing more than a buy and hold strategy generally that tracks the market. And now, again, for those of you that know us, we work with really anybody as long as you have a willingness to learn and a willingness to want to have unique strategies that are going to perform hopefully differently in all markets. And so if you have $500,000, great. If you have $2 million, great. If you have 15 million, phenomenal. If you have 20 million, awesome. But that's something that we're very, very serious about is really just trying to educate and help those that want help. But, if you have that 3 to 15 million, you qualify for something that is definitely much more unique. You're a qualified purchaser. There's things that you can do. And, those are the things that, again, some of our offerings, fit that category very, very well. And on the private fund space, Bison 2, in the energy space, and you look at where energy is today and you look at where you think energy is going to go, over the next 3 to 5 years, man, we're simply, and I encourage you to get the videos that we're putting out because it is an educational play. Oil and gas in the Midwest is new to everybody. But in the institutional space, it is not new in any way, shape, or form. It's just the investors that have had exposure to oil and gas. We consider them kind of mom and pop funds that don't have, a third-party administrator, that are not audited on an annual basis, that are not on a custodial platform like a Charles Schwab custodial platform. Now, referencing those names, being on those platforms doesn't make an investment good or bad, but there certainly is criteria and due diligence that, like our fund, had to go through to even get onto that, so our investors can see it. Their investment on that on their statement. But all we are doing, I say all we are doing, it's a niche of a niche. And I tell you, it just truly is. But in the non-operated space, we're not doing the drilling. We are absolutely 100% not doing the drilling. If the people that are raising the money are also doing the drilling, those are the funds that we run from, just because it's off the beaten path. It's just more of a speculative investment than we're comfortable with. But we let the majors do the drilling, and we're 100% in the Permian. And so tier one of the Permian and Permian Basin, just, again, take your favorite AI and have the AI explain to you just how big and vast the Permian Basin is. And it's, in our opinion, the best oil field in the world, not just here in the United States. It's unquestioned in the United States, the best oil field, but in the world is really what the numbers are bearing out. Anyways, what we've done is we've created a fund that takes small minority interests in the majors projects. So the fund has direct ownership. It may only have a 2% interest, 3% interest, 5% interest, 7% interest. And the operators will generally have the majority ownership. Well, they all will. The Exxon, Chevrons, Conocos, Matadors, Mewborns, Vaqueros of the world, which we call majors and mid-majors. And that's it. And so tax benefits are strong. Cash flows, we target 15% annualized with a 5-year exit. And so if you've sold a property, if you sold a building, if you sold a business, if you're a high wage earner, if you have concentrated stock, if you have stock options and you're trying to do some tax planning, the beautiful thing about energy, it's against active income or passive income, where most of the real estate funds, it's only passive income. But this rule can reduce your active or passive income. And again, best practice always, we're not tax accountants, we're not tax attorneys, we don't provide tax advice. I just want to be very clear. It's always best practice to talk to your tax professional. But the good news is these tax benefits are very, very black and white. So 630-492-1912. 630-492-1912. If you want to learn more about that, we'd love to send over the videos. And that's kind of the route that we are taking. It's education. Everything that we do, when you look at and you meet with us, it's all education. It's education on financial planning. It's education on tax planning through your investments. It's education on investments. It's all about education. Our job is not to try to sell you anything. Our job is to give you the pros, give you the cons as we see them, and then construct a portfolio that, whether the market's up, down, or sideways, we can point to something in the portfolio that is still delivering. And that, to me, is the role of an advisory firm. And that is missing in the market. It just is. And I think that's why we attract the clients that we do. That's why we attract the type of clients that we do, because we're talking about things, we're educating investors about things that most advisors are not. Most advisors simply very cookie cutter, 60-40, 70-30, index funds, equities, just strategies that will track the market. That can be, it's good most of the time, but there's going to come a period of time that it's not good. And the markets, they ultimately always go up over time. But man, time can be unique. If you bought Microsoft in 2000, it took you 14 years just to get back to even, and you have to always think about that. So 630-492-1912, 630-492-1912. More after the break.
Wake up, brush your teeth, get dressed, get the kids out the door, drive to the office, and realize you don't even know how you got there. Seems like while we're working, we're operating on autopilot. And while that might be okay when it comes to the 9 to 5, autopilot won't cut it for your portfolio. Your portfolio needs to pay you, continue to grow, and be as tax and fee efficient as possible. And that's where Robert Kuhn and Kuhn Capital Partners can help you. Meeting with Robert and his team at Kuhn Capital Partners is a good start to living the retirement you want to live. To set up a visit and get on the calendar with Robert Kuhn, call 630-492-1912. That's 630-492-1912, and talk with Robert about the things you've heard on today's show. You can also find out more about what Kuhn Capital Partners can do to help you with your retirement online at KuhnCP.com. That's KUHNCP.com.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, KuhnCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, independent SEC-registered fiduciary investment advisory firm headquartered in Oak Brook. We're right across from the mall. So if you Google Fidelity, we're not associated with Fidelity in any way. They just happen to be in our building. We are on floor 5, suite 530. They're on the first floor, but that's easy for you to Google. So right across from the mall, we'd love to welcome you in. If you have any questions, if you have any thoughts, if you have any requests, if you want to learn more information, if you want to talk about all of our strategies or one or two of our strategies, we certainly would love to have the opportunity to just have a conversation with you. So 630-492-1912, 630-492-1912. End of last segment, I kind of got sidetracked towards the end of the segment. But what we've decided to do is, everything we do is education. Educate. We don't want to sell. We don't want to. I just see too much selling, especially on the radio, and we'll talk about that this segment. But we are selling something. We are selling education, and we are will never ever back down from that. And we want to tell you the good. We want to tell you the bad. We want to tell you everything as we perceive them. Utilize us. Utilize our experience. We have a distinct group at our firm, some new advisors, relatively new advisors, some very seasoned advisors. So we've kind of have seen it all. So 630-492 1912. But we have some video series coming out. And because the way that I learn is if I have an interest, I want to initially reach out. And I want to initially learn more about whatever it is that piqued my interest, whether it's the banknotes that, are still pricing double digits with 30% downside, backed by, the Goldmans, UBSs, Morgan Stanleys, Bank Americas, BMOs of the world. That obviously, if we look at the numbers of why people, reach out to us and at least initially have an interest in working with us, it's always the banknotes more times than not. But if I have an interest in something, I want to learn about it. I want to just do my independent research. I want to have, just some education on it. And so that's what we've done. And so are in the process of finalizing and still creating in some instances videos on the banknotes, videos on Bison 2, our energy strategy, our tax reduction strategy, and then also Bison Alpha. And Bison Alpha is our hedge fund, proprietary hedge fund. And we look at that as a way that we like to manage personal assets, family assets, kind of our philosophy, our ideology of managing money. And it has, we just launched it. We only have 4 or 5 million in it. We just launched it fourth quarter of last year. We're going to really put a big push on, educating investors about that strategy this year. You do need to be a qualified purchaser, so $2.1 million net worth, not including your primary residence, or have $1 million with us at Kuhn Capital Partners that qualifies you to invest in it. Again, these aren't my rules. These are the SEC's rules, and compliance and regulation in this industry is very strict, and it should be. So until they lower those limits, that's what you need to have to invest in the fund. But our Bison Alpha fund is really event-driven. It's a strategy we look at for, 5, 10, 15, maybe 20% of a portfolio, of an overall portfolio. And one thing that, in meeting with us and talking with us is, when we look at diversification, everybody looks at diversification and they think they're diversified because they own 100 different investments or 100 different stocks, 100 different ETFs, mutual funds, et cetera, and they own bonds. You may be incredibly diversified in equities and fixed income, but that's not real institutional diversification in our opinion in any way, shape, or form. And when we look at diversification, you have to have distinctly different strategies. Like the banknotes are totally different than Bison 2, our energy strategy. Totally different strategies, totally different return drivers, totally different risk characteristics. That, to me, is diversification, right? And if you own a house, you may own 15 houses. They may be in 15 different neighborhoods. Some may be small, some may be huge, but it's still a house, right? So you're going to go as real estate goes. That's not diversification. And so many advisors, in our opinion, that's just what they're doing. And individuals think that they're diversified, and unfortunately they're just not. And then they find out too late when the markets, don't just go vertical like they have been. And then you're in that sit and wait and sit and hope period. And, again, nobody thinks, first of all, timing the market on a daily basis, I think, is impossible, albeit some people do it and they do it very well. Generally, those people don't need our money, so they're doing it with their own money. But, markets can stay uncertain. They can stay sideways. They can stay flat for longer periods of time than you may realize. And if we just go back to the early 2000s, look at what happened in 08. Look at what happened in 18, 20, 22. I mean, the late 90s. I mean, these markets can happen again. And I'm not necessarily thinking that we're, going to see another 2008, albeit some very credentialed people are saying things are shaping up for it to be worse than 2008. But again, everybody can sell fear, and fear is what fear is. And we're selling education, and we can't control the market, but we can control how we invest. So 630-492-1912, 630-492-1912. Goodness, I'm having a senior moment trying to get where I was going with that last topic, but maybe I was talking about Bison Alpha. But so Bison Alpha, the hedge fund, you have to be accredited investor, qualified investor, so $2.1 million net worth, not including your home. But that strategy, if we see volatility, that strategy we think can really, really get after it. Again, if you bought Microsoft in 2000, it took you 14 years to get back to even. And if we're in that type of a market, the banknotes should deliver as long as the indexes aren't down more than 30%. We're still clipping whatever the coupons are. If it's a 12% note, we're getting paid 1% a month. But again, if we see a month where the indexes are lower than 30%, we don't get paid, for that month, and that's it. Pretty strong investment, in my opinion, especially when you consider the where the bond market is. The Bison Alpha or hedge fund strategy, again, that's where I was at. So we just launched it, and we want to get the fund to $300 million, and that, to me, I think is a good number. Obviously, we have a long ways to go, but that's okay. I mean, that you have to start a fund. We don't have a super extensive track record other than just, the philosophy. I mean, this isn't new in any way, shape, or form as far as the philosophy, but in the fund, we will never show hypothetical back-tested performance. And in the annuity space, if you're buying those lifetime income annuities, that almost all of the performance that you're looking at on the illustrations are back-tested. And I don't put a lot of stock in back-tested numbers because I always joke with people, are you going to come into my office and try to pitch me on your fund if the back-tested numbers are negative? Of course not, right? So if you want a strategy that has more active management, that is more opportunistic, that can take advantage of the volatility in the market. Currently, we're very heavily in the precious metals space. Obviously, that's been a space to be in, but it's a go anywhere fund. It's, the adage as we talk about with my team is, do you want to be right or do you want to make money? And in this industry, so many advisors want to explain why they were right, but yet they were wrong, because, an asset didn't perform. That to me is just wasted energy. We just want to have a portfolio that is institutional in nature, institutionally diversified in nature, that can really deliver regardless of what's going on in the markets, because we don't know. And so many people on all radio shows, not just the station, but all radio shows are selling annuities, and we're not against annuities. Again, sometimes people say, we're against annuities. We're not against annuities. Again, when it comes to the protected growth bucket, which we classify as our bond alternative bucket, which where the bank notes fit, we have a 5-year index annuity. Now it pays us a commission, and would you, how we're paid shouldn't determine whether we share an investment choice with an individual. I would personally don't want the upfront commission. I would much rather have an annual fee, but that's just how they pay. And I think so many advisory firms, especially the bigger advisory firms, don't talk about the index annuity because it pays a commission and they just want to have a fee. How I'm paid, how our firm is paid, it shouldn't determine whether we suggest an investment to you or not. But the bigger firms out there just won't even show the 5-year index annuity, and it's a phenomenal strategy. It's phenomenal in our opinion. Again, if you want conservative protection with conservative growth, and currently it's the only one we'll do is tied to the S&P most of the time. Yes, there are one-offs, okay, but we just want a strategy that's tied to the S&P, and currently the rates on a calendar basis, you get the first 10.75% of the S&P. Now, it does not include dividends, and so you get the first 10.75, not including dividends, of the S&P. So if the S&P is up 1, you get 1. If it's up 10, you get 10. If it's up 10.75, you get 10.75. If it's up 20%, you get 10.75. So you're capped at 10.75. But the nice feature with this as a bond alternative is the gain is locked in, and so you'll never give back any of the achieved gains. And if the markets are negative, your return is zero. So again, if that fits what you're looking for, I'm not here to tell you that how to invest. We're here to show you what's out there. But my biggest concern with these lifetime income annuities is people are not factoring in inflation. People are absolutely not factoring in inflation in a fixed payment. And I just see it all the time, and I get very, very concerned. You'd be amazed the people that reach out to us and show us that I've owned this annuity and it hasn't grown over the last 4 years, and I don't want to wait for the income because the income stream was projected on the illustration to be so big, so great, but it's not materializing. So if we can help address those concerns, if somebody sold you one, let's talk about it. 630-4 630-492-1912, 630-492-1912. More after the break.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, kuhncp.com.
Are you close to or already in retirement and maybe you're not sure if your retirement plan is working as you'd hoped? Getting a second set of eyes on that plan is always a good idea. Call Robert Kuhn and his team at Kuhn Capital Partners for your retirement review. They'll be glad to sit down with you and talk about where you want to be in retirement and how to get there. So call today to set up your visit, 850-495-3033, or find out more at kuhncp.com. That's KUHNCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, registered investment advisory firm. I do run the firm. It is SEC registered fiduciary. We are headquartered in Oak Brook, right across from the mall. We love to have welcome people in. You don't need an appointment. There's a good chance that we're either on a call or in a meeting. But if you're willing to enjoy looking at our signed autographed sports jerseys and enjoy a drink, a soft drink, or a coffee, and wait till we get out of the meeting, we'd love to have you in. So we're in Oak Brook, right across from the mall. Fidelity is on the first floor. We are on the fifth floor, so Suite 530. So just Google Fidelity, and you'll see exactly we're in the same building, but on the fifth floor. So we'd love to welcome you in. Now, again, we don't have any affiliation with Fidelity. It's just a recognizable name. Most people know where that office is. And we would love to have a conversation with you. That's what we do all day, every day. So 630-492-1912, 630-492-1912. Last segment, we were talking about the lifetime income annuities. And again, there are one-offs where it can make some sense. And we've certainly done some one-offs, but it's certainly not something that we believe for the masses that it's the best use of your capital. And my biggest fear when it comes to these annuities, the lifetime income annuities, is advisors or insurance agents are showing these and selling these based on illustrations. And the illustrations, they're not articulating to you that the bulk of the performance that you're seeing is back tested, meaning it didn't happen. It's computer generated, where if it was around, this is hypothetically what it would have done. And I'm here to tell you that back tested and numbers that are actual, unfortunately, materially differ. And so that's our job. And so if you were bought one, sold one, if you had bought one, sold one, we're seeing them more and more people finally reaching out to us. And I love that because we can educate and look at, is there a way to overcome that surrender charge? Is there, we met with an individual the other day. I think he had it 3 or 4 years, and it literally had grown at I'm going to be off here slightly, but it was certainly under 2% a year. And he bought it thinking that it was going to grow based on the illustrations at close to 8 to 10% a year. And he has this, surrender charge of, 13, 14%. And you have to do some math, and you really need to look at if these things aren't going to grow. And if we can put it in, say, a banknote, and we educate you on what the banknote is, and if the banknotes are paying 12%, and assuming they don't miss any of the coupon payments with, the indexes don't breach that 30% level, it may take you a year and a half to overcome that surrender charge, but does that make sense? Because then you're actually, potentially compounding your money, even just staying in the banknotes, right? So we have to do some spreadsheeting. We have to do some math. And unfortunately, generally, when you have these big surrender charges, there's going to be some pain as far as to getting them into an investment that can overcome them. But does that make sense? Whether it takes, a year or two and then have what we would believe to be, much more consistent growth. I'm so happy that people are reaching out and saying, I put $1 million, put $500,000, put, 2 million, whatever that number is, into annuity. I was told it was going to do this. It hasn't done it. Let's talk about it. And the crazy thing is, the agents, the advisors, we see the same ones over and over and over again. So it's, again, education, talking about pros and cons, talking about, well, lifetime income may sound really good, but if it's not growing and if you look at what inflation is going to do, really what is happening to that purchasing power, what is happening to that income stream. So those are the things that we're talking about. 630-492-1912, 630-492-1912. We'd love to have, those complex conversations, and we can spreadsheet it. And it just comes down to a math equation, and it comes down to, what you're comfortable with. And, sometimes recognizing, that it's going to, pay a penalty to get out, to have a strategy that has significantly much more upside. It could make sense. So 630-492-1912. Banknotes, again, we're worried about inflation. Banknotes are still pricing very strong. Well, we would believe them to be strong, double digits. Some are, I think one of the last ones we did was over 12.3, I believe. And again, just so I'm very, very clear, every note prices at a different rate. And so when I give you these rates that they're paying on an annual basis, paid monthly, as long as the indexes don't drop 30% from issue, that's just a range, right? And so, but we have a good feel for, we keep our hands on the, we're very in tuned to what's going on. So we're still getting 11 to 12. Last one was a bit of an outlier, I think at 12.34, but heck, we'll take it. I mean, we had an outlier last April with all the volatility. It was a JP Morgan backed note, 15.5. I mean, think about that. Now, hindsight being 2020, I wish I would have locked that in for 2 years and dropped the yield to, 12 to 13, because the longer you lock it in, it hits the yield. I mean, it is, a math equation with the notes too. But again, we're still very pleased with that. So 630-492-1912. I don't know if I ever finished my story on kind of our videos that we were making. So the way I learn is if something piques my interest, I reach out. And then I want some information, then I don't want to be bothered. I want to do kind of my research. And then if I'm still interested and I still think it can make some sense for me, then I'll dive into, whoever is offering it. And that to me is non-pressure, but the best education. I think the best education are videos that, we can articulate it. That will allow you to do some independent research, independent due diligence. I think that's a must. And I think that there's so many resources at your fingertips today that independent research, I think, is the best. We just want the facts, right? And so we're doing new videos on the banknotes. We're doing, our growth strategy, it's, third-party money manager outside of Chicago. They're in Chicago, Zacks, institutional. And, we utilize a handful of their strategies. And so when you come to us, you have a good mix of proprietary strategies, because obviously Bison Alpha is a proprietary hedge fund. It's our fund. And Bison 2 is a proprietary fund. It's our fund. And there is a conflict of interest there because it's ours, right? I think that if it's if an investment advisor has their own proprietary strategy, no matter what it is, it's a conflict. And I think the way that you you handle that conflict is always to do what's right for the client and explain what it is and what it's not. And if you don't want to do it, don't do it. I mean, right in our AUM, our management agreements, it spells out every conflict, because I think it's important that investment advisors share what the perceived conflicts are. There is some benefit to having it to be proprietary as well, because, you're kind of eating your own cooking, right? And I think that's, a good thing. But on the video side, the banknotes, we're really, pumped about those videos. The Bison Alpha, our hedge fund strategy, we already have that video done. So if you want the videos on that, again, you don't have to put 100% of your money with us. A lot of people don't initially. Some do, some don't. Again, it's not what we're trying to accomplish. It's what you're trying to accomplish. And, some people will say, let's start with $500,000, million, 3 million, 5 million, whatever number that is. And then, we'll ultimately move over more money, as it goes. So if you're happy with what you're doing, but you want some banknote exposure, or if you want the Bison Alpha hedge fund exposure, or if you want the energy strategy, but yet you don't want to make a wholesale change, that's fine. Again, it's what's up best for you, not what's best for us. And so the Bison Alpha video is done. So we've got that. The Bison 2, our energy strategy, we're actually working on redoing that kind of video a little bit more in depth, a little more detail, but it's such a simplistic strategy. It's just new to individuals. And so we just wanted to articulate it a little bit more efficiently. So if you want any of the videos, if you want to learn any about that, again, just reach out 630-492-1912, 630-492-1912. We're here to help. And, that's our motto. That's our firm. That's what we do. We're here to educate. We're here to unfortunately, the advice business, I think, is broken in many instances. I think you're getting I see it. And unfortunately, with 25 to 30 years of experience, we can, I certainly can identify things, generally quicker than you're going to be able to identify it. And we just see too much cookie cutter packaged products that simply track the market up and down. And if that's the way you want your money managed, who am I to tell you how to have your money managed? But I would suggest to you that you don't pay an advisory fee, because that advisory fee can add up over time. And if you're not getting any value for that fee, then why are you paying it? And the value, I think, I know that we believe that, we believe, we believe that we're bringing value that is unmatched in the industry, whether it's the banknotes, whether it's the hedge fund strategy, whether it's our energy tax reduction strategy, whether it's our third-party growth bucket strategy that we use, or sleeve rather. It's very, very tough to compete with us when you look at what we're bringing to the table, especially when it comes to tax reduction and the banknotes, knowing the rules of the road before you go into the investment. And when you can get double digits, which they're still pricing with 30% downside, before you don't get paid a coupon, that's a pretty darn strong, good strategy, especially in a market like today. So 630-492-1912, 630-492-1912. Hope you learned something. If we can help in any way, if you would like to have a conversation with us, an initial conversation, or if you would like to come into the office, you can certainly do that by giving us a call at 630-492-1912. So hopefully everybody has a great week, and we'll talk to you next week.
This recording is for informational purposes only and should not be considered investment advice. Kuhn Capital Partners does not provide legal, accounting, or tax advice. Any statement regarding such matters is explanatory and may not be relied upon as definitive advice. Opinions expressed are current as of the date of this recording, and such opinions are subject to change. The views and opinions of guests on this program are not necessarily those of Kuhn Capital Partners. Any reference to guarantees, principal or income, protection, buffers, or defined outcome investments are generally structured notes or fixed insurance products backed by the claims-paying ability of the offering company and are not insured by any government agency. Kuhn Capital Partners is not affiliated with any guest unless otherwise stated and does not guarantee the accuracy or the completeness of any data presented. Kuhn Capital Partners and its affiliates are not responsible for any trading decisions, damages, or other losses resulting from or related to the information, data analysis, or opinions in this recording. Past performance is not a guarantee of future results. All investments are subject to investment risk, including but not limited to the potential loss of principal. Advisory services are offered through Kuhn Capital Partners, LLC, a registered investment advisor.